Hey Rebels, welcome back to the channel. In this video, I'd like to talk a little bit more about chart patterns. I had a video or comment recently asking me to dive a little bit deeper into chart patterns. So if you're new to this may look a little bit intimidating, but I promise you it's not as scary as it looks. And how you implement these patterns into your own trading strategy is entirely up to you. So with that being said, let's like and subscribe the video, and we're just going to dive right in. So and these patterns are in no particular order. I'm just going to go over some of the more common ones and how they're used and how they're interpreted. And then I'm going to tell you how I interpret them as well. So the first one I want to talk about is a descending wedge. This is a descending wedge pattern where you can see that price basically constricts and the volatility is decreased until it reaches a breaking point and it breaks out theoretically to the upside. It is typically a bullish pattern. It is expected that it's going to break out to the upside. So during my weekly analysis, this is a pattern that I had been tracking for a very long time in anticipation of a breakout. Up or down, nobody knows. Typically, it is a bullish pattern, and that's exactly how that played out. So we've been following this for weeks and weeks while everybody was getting, basically very discouraged about the altcoin market, and we saw this pattern ahead of time, and it was theorized that we could potentially be seeing a breakout. Okay, and that is exactly what played out. The way I look at this is, I think a wedge is this is my interpretation of it anyway. I think that effectively a wedge is similar to a channel, except the bottom portion you have buyers stepping in a little bit early. So instead of the price action having to come all the way back down to the bottom of the channel, you get something kind of like this, where the buyers actually are stepping in a little bit sooner than they would in a channel. That's kind of a bullish sign. It's kind of a subtle hint that the buyers are actually stepping in a larger way. Whereas previously, buyers didn't step in until they hit the bottom of that channel. So that's kind of my interpretation of that. Now, on the inverse side of that, we have ascending wedges, and we found that in the Bitcoin dominance, and we followed that for quite some time. And let me just draw that up for you. We were also following this for weeks on the channel, waiting for this breakdown in Bitcoin dominance to occur. Now, these patterns can be drawn many different ways. Effectively, you're just going to have to go in and practice yourself. I don't think that any particular way is right or wrong. These are just patterns that play out in the market over time. So we had this ascending wedge that was playing out for quite some time, indicating that potentially we were going to see a breakout to the downside. And that also kind of fit in with our analysis as far as the timing goes, because the previous cycles, the low to the high, it was kind of around this region that we were expecting a top. So this along with some cycle analysis was hinting that we could potentially be seeing a breakdown. So, and one other thing that people do with these patterns is they like to use them to project price to the upside or the downside. So in a wedge, in that case, you basically take a line from the bottom to the top of the wedge, wherever you began, and then plot that out at the breakout point, and then that gives you a projection to the downside. And in this case, it actually kind of worked out to a T, and we hit that target pretty much textbook. Okay, so that's one way that you can use these patterns to project price to the upside or the downside. Cautionary tale with patterns in general. I think that they can be very useful. How you trade them has to be up to you, because you can see in this chart of H bar, you can get a lot of these wedge type formations that you could have gotten very excited right here that we were going to break to the upside and it was on for fresh highs, and then we don't quite get there. You get scared out of your position. There's another wedge here. In this wedge form, it breaks down to the downside. This break to the downside could have scared you out of your position. In fact, I redrew this wedge after the fact. You might have had a wedge looking something like this in the beginning, fakes you out to the downside and goes against you. So it's just kind of a cautionary tale with patterns. They don't always play out exactly the same every single time. You're going to want to maybe back test your particular market to see how the patterns play out in your market. But this is just kind of a generalization, right? And then the same thing here with our measuring tool. We can measure this and then project it from the breakout point to get a potential price target to the upside. So it looks like we could potentially, from this pattern, target prices to the upside. And on a macro level, we do have higher highs and higher lows. So that seems to be playing out. But you can go a little bit crazy when it comes to drawing these patterns out and how far you're zooming in. Just be aware that there are a lot of fake outs. There are a lot of people who rely on these patterns. Market makers know this. It's very easy for them to manipulate price to go the opposite direction, scare people out of their positions at the worst time. Basically, people are selling into the market makers' buy orders, and then price goes against them. Just maybe something to consider, keep in mind. Things aren't always as textbook as they could be. So those are Those are wedge formations. That's one type of pattern. The other one that I want to discuss here is a inverse head and shoulders. This is a very popular pattern where basically you have a neckline here, you have a left shoulder and a right shoulder and a head where a price comes up to test, draws down deeper, that second test comes back down. Textbook would have been, coming back down to reach the level of the left shoulder. Higher shoulders can be interpreted as a sign of strength, where it's an even stronger market because wasn't even able to drop down to that left shoulder, and then prices continue. Now you do the same thing as far as price projections, where you draw a line from the bottom here up to the neckline, project that from the breakout. That gives you a reasonable area to expect price action to continue. Now, I wanted to take this time. This is how a lot of people will do their price projections. I don't particularly like to do it this way, and the method that I like to use is the trend-based fib extension, and that is just a tool that you can get on TradingView. It's the trend-based fib extension, where I'm going to project this move that I just drew, and I'm going to project it from this low. So if the market were to repeat this move that it did, projected from its lows, because markets do often act in a similar fashion or put in similar moves, this gives you an idea of how that move is going. So this move right here, 0.05, that would be 50% of this move projected from this low. 1 would be 100%, 1.5 would be 150%, 2 would be 200%. So you can see how the markets actually respect these levels quite a bit, where these levels actually end up being support and resistance lines as well. So this is just another way to project price. You do it how you want to. You find out whichever way works for you and how you want in your trading style. That's up to you. But this is just one method that I really like to use, because you can use this tool to see various different moves. How is the market reacting? What if it did this move, repeated this move off of this low? And you can kind of go through and find different price clusters, and it's going to give you a huge, basically give you an idea of where price support and resistance could be in a market where the price action, like we've never seen price action here for Amazon, right? So anyway, that's just kind of a bonus. Hopefully that was clear as mud. I definitely have other videos that go into that in more depth, and I can also do future videos where I explain that in a little bit more depth, because you can also use it to the downside, which is very helpful when people are basically afraid of prices moving to the downside. You can actually project those and get a good idea of where price should hold up if we're in a strong market, and give you some indications on that as well. So, however, moving on, the other thing too I want to mention on inverse, this is an inverse head and shoulder. You have the same pattern. Head and shoulder would be a bearish sign. Basically, just flip that pattern upside down, and that's going to be a bearish sign, okay? So next one I have here is Microsoft, and we're going to see, once we load, which pattern I was projecting. Okay, this one is a cup and handle. This is also a very famous, very common chart pattern to see. It's a cup and handle. You can see we have, again, kind of a neckline here. We form a cup and we form a handle right here. And this can also be done on the inverse, where if you have an inverse cup and handle, that's going to be a bearish sign. But in this cup and handle is a bullish sign. Same thing. Project the low to the neckline, project that right there, and that's going to give you an idea of where price could be. And see, these work out pretty well sometimes. And yeah, so I'm not saying that this doesn't work. I just have my own preferred method. If I go here, again, project there to there. The reason I like this is because it tells me that it repeated the move. Once we hit here, it did a 100% move. I know that this is an area, a general area. It gave me a lead on this projection. It actually gave me a lead that this price action may hit some resistance here. And also you found that the resistance here for 50% of that move acted as support and resistance for some time. So this just things to keep in mind. And in fact, you had that earliest lead projected from this low, that this 50% could be a resistance level. So this is okay. It gives you one measurement. This tool gives you many different potential support and resistance areas. Okay. So cup and handle, same thing, inverse, the inverse cup and handle. And I want to give I guess while we're going through this, I want to give my thoughts on why these patterns work. So in the case of the inverse head and shoulders, I think the reason that this works so well is because until this point, you have lower highs and lower lows, which is a downtrend. Okay. And it's at this moment that you start seeing higher lows and higher highs that basically this low formed. This is the first indication because you have the first macro higher low. This wasn't a lower low. If it was a lower low, you'd still be in a downtrend. This is now a higher low, giving you the first indication that the trends have reversed. And that's the same in the inverse. So hopefully that makes sense. I think that's why this pattern plays out time and time again, because it's effectively, you're basically just breaking the downtrend and forming your first higher low. And that can be found, you can see that many times on a smaller scales. As you zoom into these patterns, you can start finding these larger patterns, zooming in as well to kind of give you some indications of local lows as well. And the reason I think the cup and handle works so well, the reason that is working is because you do have that initial drawdown. And these are really good for large, like macro trends. You have this kind of a bear market coming up into the previous all-time highs. And then when you get that drawdown, it doesn't go nearly as deep. So it's just the market telling you that it's not wanting to sell here, it's wanting to buy here because all that buying pressure is coming in much, much sooner than having to draw all the way back down here or even halfway, right? It's just basically buyers are stepping in much earlier, and that's kind of all there is to it, okay? So the other couple patterns that I want to talk about are what we have are double bottoms and double tops. And the other ones that I want to talk about are bull pennants, bull flags. Bull pennants and bull flags, all those kinds of patterns to me are kind of in one category. They're just kind of triangular patterns where price constricts, the trends are unclear, and until they break out, you don't know which direction you're going. Because basically, when you're trending, you have higher highs and higher lows. Then when you get into those patterns that constrict, you don't really have higher highs and higher lows anymore. You may have lower highs and higher lows, or higher lows and lower highs. However that pans out, it's basically an area. It's a time of indecision. Volatility decreases, price constricts, and then it has to decide which way it's going to go. Now, most of the time, those pennants and bull flags are considered continuations, but they can break down to the downside or fake you out. So I don't necessarily use those particular patterns a lot in my trading, but they are helpful. So this one right here is kind of an obvious one, a double bottom, and you can just kind of see it from a mile away. It's basically a W pattern, and it typically signals a bottom. So why don't we just go into a chart of Bitcoin and kind of just put all of this together, because there's a lot of different patterns going on, but they just play out time and time again in the markets, right? So right here, I have a double top. That's typically a bearish sign, basically just meaning that sellers are not, or the sellers are winning and buyers are not willing to buy here. And so price goes away from this price point aggressively. And the same thing could happen in a double bottom scenario. So then we have our cup and handle here on a macro scale. And that one broke out, and that one was a successful pattern. And this is what I'm talking about. Bull flags right here. You have a couple of them here. Actually, you zoom way in on the daily. Right here, you have a bull flag right here, and then where price basically constricted, and then it broke out to the upside. And then you have this again, another kind of bull flagish pattern where it got faked out to the upside and the downside before moving on. So one of the reasons I don't necessarily put a lot of weight behind these particular patterns, these continuation patterns, is because effectively you can just use the trends. If you're following the trends, that's fine. You don't necessarily need to get so nitty gritty, but that depends on your style. If you're day trading and that's the thing that you want to do, and that's the thing that you want to backtest and become an absolute professional on, then that's something that you can do and you can explore yourself. So I'm just kind of showing some of these patterns and how they can be interpreted, how I interpret them, and how do I use them in my trading style. Well, the big one was this big cup and handle. When we had price reach here in mass euphoria and price started to basically aggressively fall from that price point, when I zoomed out at the time, I was like, well, we just have this big cup and handle and we're coming down for a retest. And that's exactly what happened. This happened over, several weeks, many months. And there was a lot of fear coming back into the market. But if you just zoomed out, you could just see that from a technical standpoint, we were just coming back down to retest that cup and handle, and we were likely to go higher because we weren't overcooked in the cycle, basically, right? So then zooming in here again, we have this inverse head and shoulders playing out. There's your neckline. We had a nice breakout, come back down for a retest. Now we're actually getting rejected. We're seeing some fair amount of price action beneath this point. So whether this pattern plays out or not has yet to be seen. So that's another kind of reason why I want to bring this up, because if you are bullish on a market, you can draw these patterns in ways that basically support your thesis. And the same thing with if you have a bearish thesis, you can start drawing these things and curve fitting these things to match your thesis. And it's a dangerous thing to do. So they can be helpful. I find them more helpful on a larger time frame because this giant cup and handle, a little bit harder to manipulate, a little bit easier to interpret, I guess. Like I said, the buying stepped in a more aggressive way before we, drew down to these lower levels. So that kind of played out, but this inverse head and shoulders, whether that's going to play out, sometimes it's a little messy. Do you want to use that in your trading or not? That's up to you. You have to basically figure that out for yourself, So I hope that this was helpful. The one last thing that I did want to mention here is the volume on these patterns, on these breakouts is important. So if I zoom out here, we had that giant cup and handle that we talked about, and then we had this breakout. And the thing that we like to see, if I can turn the volume back on, is that we liked to see volume coming in at the time. So if we zoom in here, as we broke out of this pattern right here, we had volume start to step into the market. You can see that this in general, actually it's a lot easier to see on a weekly time frame. A lot cleaner to see on a weekly time frame. As we broke through that support and resistance, we had a nice spike in volume down here that was much higher, I guess, than the previous price action for the last several months, right? So that's another thing that I wanted to mention. A lot of times when you see this, you want to see this happen on volume, because this is actually, the volume is telling you that there are actual buyers coming in to support this move. If you see this breakout happen on weaker volume than before, it could be a warning sign, something you might want to look into. The other thing I want to mention here is, yes, we did have that inverse head and shoulders, and we did have this breakout right here on a little bit higher volume than before. But the thing I want to mention is that in general, from this breakout point, we've actually seen steadily declining volume. So the interest is waning, which actually kind of ties into my weekly analysis that I have been doing for some time, that the interest is kind of waning from Bitcoin. We are starting to see some weakness. Anyway, I hope this was helpful. Please leave some comments down below. I'd like some more ideas for some other videos. Patterns are very useful, and I suggest that you go out there and learn how to project price from them. The other tools that you want to use, I guess, as well to test yourself, the trend-based fib extension using the settings 0.5, 1, 1.5, 2, and 2.5 will just give you a measure of each move projected off whichever low that you want. And that will also give you some price projections to the upside. Again, I'll do more videos on that in the future, but hopefully that kind of gives you like a well-rounded beginner's course of what patterns are, my interpretations. What I will end this with is, I think the most important thing is the trend. So no matter what, if you're trying to curve fit patterns, you can use patterns that can be helpful. It definitely helped me here. This was a scary time. This was a scary time. This was a time that patterns definitely helped me out. And I was able to hold that conviction because I saw this pattern from a mile away. Once I zoomed out, there was a lot of fear coming in, but I was like, you know what? I think this is just a technical retest of this pattern, which is typical that I've seen many times because I've gone back in the markets and looked at these patterns for myself. So that's going to be something you want to do. I think it's going to be helpful tools in your kit. And you can definitely go through all these little patterns. These are definitely helpful, and a lot of people use them to trade. So, I mean, I don't necessarily use them in my trading. I use them mostly for analysis. And the way I like to look at them in general is any of these triangular patterns, anything in this is basically just a constricting range, because markets range, they go sideways, and then they trend. And so when they're in these patterns, the trends are becoming weaker. They're not as clear. And once the breakout happens and you have confirmation of those breakouts, that's typically when markets trend. So a lot of times these triangular patterns or these sideways patterns, I basically consider either indecision or range trading. And that is helpful alone because it's like basically the trends are not clear at that point. And maybe you want to wait until the trends are clearer in order to basically hop in the market or decide what you want to do from there. So anyway, I know that was long-winded, kind of jumping around all over the place, but yes, do yourself a service and study these patterns for yourself. And hopefully what I've been talking about can aid you in your interpretation. Leave some comments down below. Tell me if this was helpful or not, and we'll see you in the next one, guys. Take care.